Fair warning, I am once again being chased by the rain, and weather app's calling for rain within the next 20 to 30 minutes. So hopefully I'll be able to spit out all this video before that happens. But if we get caught up, I'll stop, finish at the beach or something later like I did last time, and let's get into it. The big problem that we all are probably aware of at this point is whether or not the US government is going to hit the debt ceiling and default on its debt obligations. And we're about a week away from the do or die moment. They have until June 1st to figure all this out, and there's talk of them potentially. Hey, thank you. I think we just had a cop say he likes my videos. Super cool. Now there's a lot of talk that they may do a short-term solution that'll get them through the first couple of weeks in June, and they'll have a little more time to figure it out. But honestly, what's the point of that, right? I mean, if they can't figure it out with all this time they've had to figure it out, what's a couple more weeks? I don't understand the hang-up, right? I wanted to talk a little bit about today of some of the consequences of this, because what a lot of people might not realize is there can be a lot of consequences in the economy from this debt ceiling crisis, whether or not they come to a solution at the last minute or not. And the reason for that is because even if they don't default, which a lot of people say that a default is very unlikely, however, there was one default in the past, which we'll cover here in a minute. The reason why even just getting close to having a default is problematic is because it puts investors and people who own US debt on edge of whether or not they're going to get paid. So every passing day that goes by where there's no solution to this, it makes people very wary if they're actually going to default this time. Now, even before this default, mortgage rates are already back up to practically near 7% again, in case you didn't know. And since we already have interest rates at 7%, it is now predicted that if there is a default, in the unlikely scenario that there is one, that interest rates could easily jump up to 8.5%, maybe even 9% for the average 30-year fixed rate mortgage, guys. If that's not going to be the final blow to the housing market, I don't know what is. But that still doesn't solve the inventory problem. Let's not forget about that. But it is yet another obstacle for people who are looking to get into buying a home right now. But let's look at what some of the repercussions from this can be, even if we don't actually default, but get very close to one. Let's say they figure it all out at midnight on May 31st. Well, that's almost like having a default. And what this can do is it can basically push the entire world into a recession, in case you didn't think we're already in one now. And also, it's going to make the credit crunch far worse than it is right at this moment. And they're saying that it can make GDP fall to levels that we haven't seen since the Great Recession. Huh, what do you know? I guess at some point you just get numb to all the madness that we see around here. This house was purchased 10 years ago in 2013 for $926,000, probably knocked it down and built this palace, and now it's worth 10 times more magically. $9.5 million, and they tried getting $11.5 million, still no takers. And the property tax bill is surprisingly low for a house this expensive, probably because they got it so cheap, at only $24,000 a year. But I imagine the new owner's probably going to be paying in the neighborhood of about $100,000 a year. Now let's look at the past, because there's this notion that the government never defaulted on the debt before, but they actually did one time in 1979. And it was apparently an unintentional default. And that's one thing that really separates this situation from the 1979 situation. And basically what it was back then, it was a technical check processing glitch that delayed payments to certain US Treasury bondholders, and they pretty much got it all worked out within a matter of a couple weeks. People who didn't get paid ended up getting paid within those couple of weeks, and everything was resolved. But the big difference this time is they're intentionally not fixing this, okay? They're letting this ride down to the last minute out of political reasons, as usual, and potentially a lot of suffering might come from this, even if they don't actually default. All they have to do is get close to a default, which will be enough to make a ton of problems come true for all of us. And so basically how the world views us and our financial stability this time around is in jeopardy, because since the last default was completely unintentional, and this time it's a political game of chicken to see who's going to flinch first, it's a wildly different story. Now, if they actually do default, a whole host of things are going to happen that's going to mess everything up big time. You're going to have people missing their Social Security payments, and federal employees who are supposed to get paid will be missing their payments as well. And after that default, then the US government won't be able to actually pay bondholders, people who own US Treasuries, and pay the interest on that. And what that would end up doing is cause a huge sell-off in the Treasury market. Also, their credit rating will get downgraded, and they'll probably have to start offering even higher interest rates for people to take on the extra risk after this. We've also seen so many people pour money into the money market accounts after they've been pulling money out of the banks and money out of the stock market and into these money market accounts. Well, those can be in trouble as well, because a lot of those money market accounts, they invest in short-term US Treasuries. So they could be seeing trouble from this. Anybody who collects Medicare or Medicaid or is on any sort of nutritional program like food stamps, welfare, anything like that, yeah, you're not going to get paid either. Also, let's not forget that a default on the debt would cause the stock market to completely crash, and there's no easier or more clear way to state that. We've already seen a lot of volatility in the stock market recently because this hasn't gotten resolved yet. This can further increase problems that we're seeing with the banking crisis as well, because so many banks have their customers' money invested in these US bonds. So you can see how all of this is tied together and how it's going to cause major disruptions in our economy if they default or even get close to defaulting. You would see interest rates for loans spike. As if they're already not high enough, well, it would go even higher for everything, guys. We are talking about personal loans, student loans, credit cards, business loans, lines of credit, okay? Any type of loan you can think of, car loan, everything will be higher. And then of course that affects mortgage rates too. You're going to see higher mortgage rates from all of this. And if you have an adjustable rate mortgage, well, that's really a bad place to be right now. You could also see people getting delays in their tax refunds, which might, make people miss payments on things if they're relying on getting that money soon. And because this potential default is putting our credit rating in trouble, it's just like you and I that have a credit score. Well, if you do default, then you're going to be much less likely to get a loan next time around when you need it, which is going to make it a lot harder in the future for the US to keep amping up how much debt they have on their books here. And also, like I said, they don't even need to actually default. Just getting close to this and having the whole world see that we're willing to say maybe we're not going to pay our bills this time is not a good sign and not a good message to a lot of foreign countries that do buy our US debt here as well. This can have serious ramifications for the future as far as how much debt and leverage our country is going to be able to take on in the future. Now, switching gears a little bit, I have some random stories to throw in here. First thing is homeowners insurance with solar panels, guys. There's been numerous reports recently of homeowners insurance companies dropping people after they install solar panels on their homes. And we kind of covered this a few months ago in an in-depth video I did about insurance, but I wanted to bring it up again because more people are looking at getting these solar panels in order to save money on their utility bills, which makes sense, right? But the problem is some people are not checking with their homeowners insurance first to determine whether or not this is going to impact their rates or even if they'll have coverage afterwards. So homeowners insurance is already a big problem here in Florida, but a lot of other states have seen increases on this as well. The thing is, if you're gonna be getting solar panels or you're considering it, first thing you should do is you should call your insurance company and see if they will even still cover you if you get them. And if they do, how much is your premium gonna go up or down by? This is crucial for you to know this as the homeowner. And the second thing is that a lot of people don't realize, and I didn't even realize this until I started looking into this. You're not supposed to put solar panels on a roof that's specifically 10 years old or older because of all the roof problems we've been having with insurance as well, right? Well, on top of that, if you were to get a new roof, let's say you get a new roof next month, and then you want to put solar panels on shortly after that, pretty much all the time, if you do that, that can void the warranty on your brand new roof. So a lot of times your brand new roof will come with some sort of warranty, but if you're going to drill holes through it and put solar panels on top of your roof, you can kiss that warranty goodbye. If you ever need repairs on the roof, roofers will not remove the solar panels to do the repair work. So it sounds like this can be very problematic and probably isn't worth all the trouble of actually going through this, if you ask me. I don't think you can save enough money on the utility bill to go through a hassle like this, in my opinion. But you can't say I didn't warn you about it, so make sure you know about this in case you're considering solar panels. Now, so many home buyers have been looking at buying new construction properties because they are far more widely available than many resale properties, like in a neighborhood like this, where it's already established and there is no more new construction unless they're tearing down a house and building a new one in its place. Inventory on new homes is actually up 0.2% as well, and it's at a 7.6 month supply, which is pretty healthy. I mean, that's pretty much a buyer's market, and that's why you're seeing so many home builders give incentives right now to people to buy these new homes, because they have more homes available for sale than they can really sell at the moment. And that's also why you're seeing prices for new homes go down. It went down to $420,000 in April, and that's down 8% from a year ago. Even with the demand for brand new homes being as high as they are, you're still seeing sales of new construction homes fall throughout all parts of the country. In fact, in the Northeast, new construction sales are down 19.2%. In the Midwest, down 9.8%. In the South, it's down 0.7%, and in the Western US, it's down 27.5%. So no matter which way you slice it, the sales for these new construction homes are still down, which is obviously greatly impacted by inflation and high mortgage interest rates. I think it's going to be interesting to see if we do get a glut of new inventory on the resale market, if you're going to see the same trend, because this might give a preview of how things would look if we were to see 500,000 new homes hit the market that are on the resale market. You're still seeing sales go down, okay? Even though there's a lot of inventory, probably because people can't afford it. That's my guess. Also today, I saw this interesting story talking about how your timing right now with the housing market is the most important part of your purchase, more than anything else, including your interest rate. What do you know? Now, obviously, the traditional advice when it comes to buying anything, especially investments, is you can't time the market, right? Well, I think with real estate you can. It's not really that difficult to time the market. Prices are going up or they're going down, and right now, in many places, prices are starting to go down. We know that some people got extremely lucky and they got that 2.5–3% interest rate when interest rates were at record lows. But let's not forget something here, guys. Some people might say that they are the luckiest people and got the best deals, but don't forget that a lot of those people were pressured into buying because of an extremely hot housing market, maybe even bought a house that they're not happy with anymore and wish they didn't buy, or ended up paying over asking price for the house, and now they're in an environment where prices are starting to go down. So even though they have that low interest payment and lower mortgage payment than somebody buying today, it doesn't necessarily put them in a better financial position. But if you were lucky enough to get a good price and a low rate, then that really can propel your financial future way ahead of somebody looking to buy at today's prices and today's interest rates. But anyways, the whole idea of this story about timing the market is based on the idea that what happens after you purchase the house is extremely important in terms of where the housing market goes. Obviously, if you bought a couple years ago and you got a good deal, you're probably sitting on a pretty solid equity position on the house right now. Versus if you were to buy today and prices continue to go down like they have been, you're not going to be sitting very pretty at all. And I just wanted to bring this up because you don't often see the mainstream media talk about things like how your financial future can greatly be impacted on when you buy a home, because they always have that stupid old saying that it's not about timing the market, it's about time in the market. And there is some level of truth to that, because the longer you hold on to property, then the better off you'll be. But we know that most people just don't do that. That's why timing the market is very important if you're somebody that's not planning on keeping your house that you're buying for 20 years. I don't know how many times I have to say that, but I have to just keep reiterating things, guys. Like, people learn through repetition. There's a lot of first-time home buyers that watch my channel. There's a lot of seasoned people that, seasoned investors that have bought and sold real estate countless times. And I'm sure a lot of those investors will also agree that when you buy is extremely important in terms of how much money you're going to make on that property. Yes, your timing is important, and right now the timing is looking very sketchy, to say the least. Now, the last thing I want to leave you with, because I know some people are going to buy no matter what, and that's fine. You can do whatever you want, and it's still not a bad time to sell. So, by the way, guys, don't forget, I have a link in the description. I can set you up with a real estate agent totally for free. Doesn't cost you anything. Helps you and it helps the channel. So if you need a real estate agent and you don't know anybody, feel free to use my link. But there's a few things you gotta watch out for when you get a real estate agent, guys. And the number one thing that I've seen over the years that I think is just disgusting is the pushy real estate agents. I can't even tell you how many times I showed up at a showing with a client and the real estate agent is just like all over them, like trying to convince them that this is the right property for them. They don't even know them. They don't even know what they're looking for, but somehow it's the right property for them. Huge red flag. If you run across an agent like that, ditch them, guys, because these people will have zero concern about whether or not you're buying the right property, okay? The next thing is, if you're asking them about the neighborhood, recent sales in the area, and what a fair price to offer on a home would be, and they don't know these things, that's another red flag. It means they don't know anything about the area that they're selling in. In fact, when I was working full-time as an agent, I only focused on this area. Where we're walking right here, North Bay Village and Miami Beach, that's it. That's all I did, which is a very small geographical area. I never really went outside of that, except for a couple of times when I had a couple clients practically beg me to. So I did it because I knew they were good for the money, so to speak. But other than that, I focused on one narrow geographical area that really helped me stay completely in tune with the market here. I knew what everything was worth, if this was a fair price, not a fair price. I could tell you where all the local amenities are, what's happening in the neighborhood, things like that. But a lot of agents, they will run anywhere for a commission, and those are the ones to stay away from because they're desperate and they're just like the first ones, that they just want to get the commission and don't care what you buy as long as you buy something from them. And the last thing is part-time real estate agents. That's generally not somebody you want to work with or hire as an agent, whether it's for selling your home or you're hiring them as your buyer's agent. And that's because if they have another job or other priorities, then basically you're not going to be the priority. And that can be a problem, especially if the market's still competitive, which in a lot of areas it is due to low inventory. And the other thing is availability, guys. Like getting in to see a property, whether you have the listing or you're the buyer's agent, getting access to properties is one of the number one things that can give you an advantage in this market. When you have somebody that's working part-time, they're not going to be able to give that same level of quick access to properties. I can't tell you how many times that people would call me up literally that same day and say, hey, can I see this place in half an hour or 1 hour from now? And when I was only doing real estate, I'm doing that full-time, most of the time the answer would be yes. Like, yeah, sure. I live right down the street. I'll be there. You hear that? I think we're finishing right in time. Feel some raindrops. So watch out for these things, okay? Make sure you are hiring a professional. Use my link if you need a professional, guys. I only work with professionals. If you enjoyed this video, make sure you click the bell notification down below. YouTube will alert you every time I post a new video. And if you don't want to wait, check out my next one on the screen right over here, and I'll see you in the next one.